Michael Saylor just hinted at selling Bitcoin, and the internet immediately started losing its mind. But honestly, most people completely misunderstood what he was actually saying, because no strategy is not suddenly turning bearish on Bitcoin. In fact, according to Saylor himself, the company still plans to aggressively accumulate even more BTC going forward. The difference is that now they may sell a tiny portion of their holdings, roughly 0.2% per month, while buying 5 to 10 times more during the same period. And when you zoom out, that completely changes the story. Right now, Strategy holds over 818,000 Bitcoin, making it one of the largest holders on the planet. At current prices, that is a position worth well over $80 billion. So yes, technically they may start selling some Bitcoin, but the reason matters, this is not panic selling. It is not a loss of confidence. And it is not Saylor abandoning the Bitcoin thesis. The company needs to fund dividend payouts tied to its STRC preferred stock, and instead of issuing more shares or taking on additional debt, they are considering using a very small portion of their Bitcoin treasury to help cover those obligations. And honestly, from a corporate strategy perspective, that is actually pretty logical. Because if they issued more shares, existing shareholders get diluted. If they take on more debt, risk increases. So instead, they are using the strongest asset on their balance sheet to support the structure while still remaining a heavy net buyer overall. That is the key detail most people missed. Saylor literally said that even if they sell 1 Bitcoin, they expect to buy 10 to 20 more. That is not bearish behavior. That is financial engineering built around Bitcoin accumulation. Now here is where this gets more interesting. For years, critics have argued that Strategy's Bitcoin was effectively locked away forever, almost like it had disappeared from circulation entirely. But this announcement changes that perception slightly. Because now there is at least some acknowledgement that Strategy's Bitcoin treasury can function as a financial tool, not just a static reserve. And honestly, I think that is actually bullish long term. Because it shows Bitcoin evolving beyond just a speculative asset. It is becoming treasury collateral. It is becoming balance sheet infrastructure. And whether people realize it or not, that is a major shift. Now obviously, there are risks here too. Strategy's ability to continue buying more Bitcoin depends heavily on market conditions staying favorable. Equity markets need to cooperate. Investors need to keep supporting their capital raises. And Bitcoin itself needs to remain strong enough for the strategy to keep compounding effectively. So this is definitely not risk-free. But what is fascinating is how confident Saylor still sounds even after accumulating this much Bitcoin already. Most companies would be trying to reduce exposure at these levels. Strategy is still talking about permanent accumulation. That tells you something about how they view Bitcoin long-term. And honestly, I think this is one of the reasons the market keeps treating every pullback differently now. Because unlike previous cycles, you have corporations, ETFs, institutions, and treasury companies constantly stepping in with demand. That changes the structure of the market over time. Now, at the same time, whenever Bitcoin enters one of these accumulation phases, attention usually starts expanding outward into projects connected to the Bitcoin ecosystem itself. And that is where something like Bitcoin Hyper starts getting more attention. Not financial advice, but it is currently priced around 0.0136799 and has been building visibility across platforms like CoinMarketCap, 99 Bitcoins, and other major crypto publications. What makes it interesting is the focus on improving Bitcoin usability and scalability as adoption grows. Because if Bitcoin keeps evolving into institutional infrastructure, projects building around that ecosystem naturally start attracting more attention too. Now, does that guarantee success? Absolutely not. Crypto is still incredibly risky. But historically, when Bitcoin narratives strengthen, capital often starts rotating into adjacent sectors connected to that momentum. And right now, the Bitcoin narrative is clearly becoming bigger than just price speculation. So bringing it all together, Michael Saylor is not backing away from Bitcoin. If anything, he is showing the market how Bitcoin can start functioning as an active treasury asset while still maintaining aggressive long-term accumulation. And honestly, that might end up being more important than the actual 0.2% sale itself. Because the real story here is not about selling Bitcoin. It is about Bitcoin becoming integrated into corporate financial systems at a level we have never really seen before. And if that trend continues, the next phase of crypto could end up looking very different from the last one.